Welcome to Dividend Portfolio Review. This is Eric. Today's Friday, June 9th, 2023. Welcome to the bull market. Bull market 2023. Viva la bull! Current value of the dividend portfolio is $48,716 and change. If you're new to the channel, this is Dividend Portfolio Review, where I track my dividend portfolio. It is currently broken down into two separate accounts, one being a Roth IRA and the other being a taxable brokerage account. I currently put in $375 biweekly to that taxable brokerage account. And if you're a returning viewer, welcome back. Either way, smash a like, click the subscribe button. That would greatly help us with the YouTube algorithm. Let's dip on over to the portfolio. It's down, about $30, $20 and change from a few minutes ago. That's fine. There's ups and downs in the markets every day. It's funny to finally see this market return in the positive for this project that I've been doing here on YouTube. It's been negative the entire time, but it's fine because you buy low, sell high, or you hopefully never sell and you just keep getting your dividends. The dividends for this week are none. Next week should be a big week. We're in June. I should be getting, I think, 17 different payouts from different companies. I did have one buy this week in the brokerage account, and that is Nexstar Media. I bought 3 shares. So if you look at that, that's 3 shares is more than that. That's about $450 and change, for $480, something like that. So basically I had some money left over, cash, in my brokerage account, sweep account, and I used that with my $375 this week to purchase 3 shares of Nexstar Media. If you don't know what Nexstar Media is, well, first off, it's up 5% and change since I purchased it. Let's go over to Seeking Alpha for Nexstar Media. Currently has a sweet spot price earning of 12.5. Yield on the dividend is 3.25. Market cap $6 billion. And short interest is at 6%, so not too high on that. If you go to the dividends, that's what we're here for, right? Let's go to the dividend history. 9 years of consecutive payments. 9 years of dividend growth. That's pretty sweet. It's not, 20 years, 25 years, but all these companies that have 20, 25 years worth of dividend growth, wouldn't you rather have gotten in them at 9 years? Because let's go to 10 years. This is all of the dividends. So 9 years ago, or 10 years ago, look at that. 12 cents. And what's their dividend now? $1.35. I'm not about to say that this will continue at this growth rate. That would be spectacular if it did. But this would be great if we were to get like $13, the equivalent of $13 a quarter for each share. But yeah, it's a solid company. It'll be become a August payer. Or the second month of each quarter payer. It's pretty sweet. So if you don't know what Nexstar is, let's go to the summary real quick. They're a broadcast company. They own a boatload of local television stations. They own a few cable stations. I know over here in the Northeast, they own what is it called? The CW. The CW Channel 11 in New York City. Basically that's all it is. It's a television, media group. And they're doing pretty well. Let's look at the financials real quick, the balance sheet. There we go. You can see here they've been growing their cash and equivalents over the past few years. That's something good. And account receivables have been growing over the past few years as well. It had a slight drop on the last report in 2023. To current total assets growing as well. That's great. Total combined assets, it dropped a little. That's fine. But they're still going profitable. Current liabilities, $864 million. Let's see how much cash they currently have. More than enough to pay everything off with the receivables right now. But wait, where's the cash? The cash is $413 million. Okay, so they don't have enough to pay it off right now, but they are, you know, the liabilities, they jumped massively from 2018 to 2019. They've gone down. They trickled up a little bit, and they've gone back down. They're not doing anything crazy with their debt right now, so that's great. Total current liabilities and total common equity is $2.6 billion. So the total common equity is in line the past few years, pretty stable, and that's about it. Total full-time employees. Look at that. I love seeing some of these companies where full-time employees it's 38 and it's a multi-billion-dollar company. That just goes to show how kind of sleazy some corporations are in America, that they can be valued at like $35 billion. I'm not saying that this is Nexstar. I'm saying certain companies, 38 full-time employees and a whole bunch of contractors. Insanity. But Nexstar Media, I'm thrilled to have gotten in. It's down off the 52-week high at 217. I got in shortly after the 52-week low. Where was the 52-week low? It was right around here somewhere. Right around the end of May was the 52-week low. So I got in first week of June, right near the lows, and it's bouncing up. And that's great. So I've now added a media group, and everything went to kaput right here. Any which way, I look forward to getting payments next week. And once again, thank you for listening. Thank you for watching. Thank you for viewing. Love to see you back. Hope you have a great weekend.